Hi, I'm Leslie Ann Smith, and this is Real Estate Masterminds. We are in October 12th, 10th, I think, and we are doing a class on the real estate cycles. And this class will be really specific to literally this day in the real estate cycle. It really applies to where we are. My interviews with different people, different investors. I interviewed some agents. I interviewed some other friends that own property that are just dabbling. And I got my brother, who's a really good investor, and I got information, and I'm going to share that with you. And then along with a section from my class that I have, I will let you know what I'm thinking about the upcoming real estate cycle. So everybody likely knows that we have real estate cycles. Generally, it's been about 7 years, they say, where there's a cycle where we are on an upward trend, and then you'll come into a downward trend. So we are right now on a cycle where we're somewhere at the crest. And so I started with my research, asking different people what they felt the hi, Amadea just walked into the room, so welcome Amadea. Hello. So anyway, I did some research and I talked to some different people. Can we start over, Wendy? Is Wendy there? I don't know if Wendy's there. Okay, so anyway, I started talking with different people about what was going on in the real estate market and interviewing them and asking them, where do you think we are in the cycle? When do we think things are going to happen? Give me 3 things that you think are really important for new investors and seasoned investors. Tell me what you've learned. And I got some nice information, so I'm going to share that with you. Again, this, as I was saying earlier, is a share that is specific to this time, like literally to this day. If anyone's aware, the stock market has really gone south. So people, the last 2 weeks, so people like me, and many investors have lost a lot of money. And so the money's just not as free to go invest in something or buy something or do a remodel. Probably offers aren't going to be over asking. You know, there's just a shift already that's happened in 2 weeks. So tomorrow we could have a bounce back for the next 2 weeks. I don't know what will happen. So again, really, this assessment and this talk about real estate cycles is sort of specific to the hour. I've already was on the phone with my sister who's been online, who trades stocks, and she said that she's on, and the futures for tomorrow, the Dow's already down 100 points. So all the input that's in to buy or sell stocks is putting it down 100 points. So we don't know exactly what will happen, but there you have it. That's the undercurrent that's happening currently. So what I'm gonna share with you what I teach in my class, and it's one of the sheets is about real estate cycles. So let me share this with you so we can look at this.
We have one person.
Yes. So let me lower this. Okay. So I teach a class and we have this about real estate cycles. So there are definitely cycles in real estate. There's business cycles. There's, cycles in life, cycles in plants, cycles in all of our living and growing. So real estate's like everything else. It has cycles. And the base is, don't be surprised because they always happen. And people say, like, oh my gosh, I lost money. My building went down and, all of a sudden I got hit and this, everything went down. Well, I always wondered when somebody says that, if you're really a seasoned investor and you follow things, you kind of know when you're heading into a down cycle within a couple years. So some happen, like the one in 2006 that was pretty quick and kind of a surprise. But this one I think is going to be a little more predictable. But if I knew that, I would, have the crystal ball. So I'll give you some educated thoughts about it, along with the people that I interviewed. So real estate cycles. I'm sure I did, didn't I? Hit the share button. Okay, so here's the real estate cycle graph. Thank you to Allie for helping me make sure everything's up. Wendy, are you there? Okay, so looks like we have somebody else on the phone. Welcome. All right, so real estate cycles. So things will go down. So when you buy that $1 million building and all of a sudden it's worth $700,000, that will happen. Could happen and likely is going to be part of the cycle. Much of what anyone needs to do is to set themselves up so they can sustain a downward market. So here's the little graph is what I see as a very simplistic view of the market. So you've got an upward trend and you're coming up. You don't know when it's really going to crest, when we're going to go into a downward market. Generally on an upward trend, you want to get the cash out of the building. And it's so counterintuitive because if you have equity saved up in your building, you've owned it for a while, it's $1 million building and your loan is only 500,000. So you have 500,000 in equity. That's what that would be called. You're a little fat on your equity. If you're trying to manage that equity, then that is money that's not doing a lot. I have another video that really talks about leverage and equity, but I won't get into that here. But if you have cash that's sitting there, when you're getting ready to go into a down cycle, it's safer actually if the cash is in your pocket than the bank's. And when you get into a down cycle, it's harder to get your money out of the buildings, harder to refinance. Generally, money isn't flowing as freely in any direction. Even the banks are not flowing with the loans as much. If you go to buy something, whereas it might have been 25% down in an upward trend, then now it's going to tighten up and you probably have to put more down on a building. So in an upward trend, if you can refinance and pull something out, you don't want to get over leveraged because you wouldn't want to go into a downward trend with a big mortgage payment on a building, because that would be a little tough if your building didn't have a lot of slack and a lot of room to have extra income. So you would want to refinance it and pull some cash out so you have it in your pocket. So if something happens, you have to carry the building for a bit. You have 3 or 4 tenants move out of a 6-unit building, that you can carry things and that you're comfortable. The other reason to pull money out of buildings is because, as one of the agents said that I interviewed for this, what do you recommend that people can do, and what advice could you give to people about a down real estate cycle? He said, I have 3 things: buy, buy, buy. So that would mean if you've got the cash in your building, it'd be better off to have it in your hands because you might be able to pick up another property. Okay, so on the downward trend, you're going to want to manage the property and sustain. Like I said, you have to sustain through the down cycle. So part of what that means is tenants move around a lot more. There's people going into a 1-bedroom together, families moving in together. It seems to be loss of jobs. There seems to be a lot of movement. So we end up with rent concessions, which means you say $500 off first month's rent. The better way to do that, of course, is try to negotiate with the deposit. So give somebody $500 off their deposit, maybe, is one direction that we sometimes go in. So you're not actually giving up income. You're just hoping and working with a tenant that has good credit, and that you could hope, again, you're still writing it a little bit, hope that they don't burn up their deposit. So that would be a trust thing. But anyway, so you have more movement in your buildings, less income. You have to really work with the tenants, keep them there if they want to move, maybe try to move them into another apartment. Tenants are more scarce. So we go into a cycle that's downward, and usually a cycle is about 5 to 7 years. Well, I'm going to say 7 years average. I think the last one was longer.
But Leslie, even in this market here where there's like so many people moving to LA all the time, I mean, really?
Well, it happened 6 years ago. I mean, I bought most of my portfolio between 2001 and 2007 and 8. And I was just counting, I got 3 buildings in the down cycle last time. So yeah, I bought them in the down cycle, and the rest I bought in the up cycle, and 1 at the very top of the market, and they're all fine, and they're all great. And the ones that I paid less for, yeah, that's great, and you definitely want to do that, but they're all running well. They're all really full. And if you bought a building for $550 and you could have gotten it for $520, after you've owned a building for 3 or 4, 10 years, it doesn't matter what you bought the building for. So when people really are trying to get 10,000 off and negotiate the inspection when there's a nice building, I always say buy it. Just don't get penny wise.
But I'm talking about rents.
Rents, I definitely did have tenants leave, and there's a definite movement in the cycle. So yes, people aren't moving. If the whole country's in a recession, people are not moving out to California to start new jobs and things. There's not as much influx. Everything is kind of hit. Like buying a car slows down. Everything of moving of something buying couches, it all kind of slows down. So it happens in rents too. So the rents have to be dropped, and you have to sometimes go in and say, this person's high, my gosh, down the street now they're at 1,600, we got these people at 1,700, we need to go in and mark down rents before they give us a notice. And just say, the market shifted, we're acknowledging that. I mean, and it's, for me, it's being proactive. And I have to say that it's been really great for me having a gal that was a role model. And she's the first gal that I taught my classes for, Pacific Blue Investments, Lisa Vander. And she had her business. It was all about refinancing and investing in real estate. And when the market crashed, which literally was in like a week or 2 weeks time, and you couldn't refinance everything. This was in the last downturn. It was basically based on the fact that banks quit lending, that just the whole mortgage industry had a meltdown. And so when she saw that, she just immediately said, my business is built on people refinancing and buying apartment buildings. I'm shutting my business. And within, honestly, 6 weeks, she said, I love my business. I have 6 employees. It's fabulous. And I see everything shifted. I'm closing my business.
Jeez.
So I have to say, I've always admired her for being really clear and really knowing what her business was and what to do. So if you take that mentality and apply it to the apartments or anything you're selling or working on, or I guess life, is to be pretty swift and make a decision and to support what is. It's not, oh, we were getting 1,600 a month in rent. That's not what the market is now. So you have to really keep a pulse on the market so you can keep your units full. And hopefully your buildings look pretty good. When things are going down, of course, it would get more competitive to get the tenants because it's a little scarcer. So when things are going down, you also can get contractors for less expensive. So in the downward cycle, it's a good time to remodel, do any building additions, landscaping. It's kind of tough because maybe the cash flow isn't as good, but your money will go definitely a little further in a downward cycle. So at the bottom, you just got to trust the big picture, knowing that the cycle is going to come out. Your buildings, if you have bought them well, if you've got the padding, I always say if you're buying your first building, try to buy a duplex, triplex, fourplex and move in yourself. That would be some padding because you're one of the tenants. You're getting your rent for free or subsidized anyway by your tenants. So hopefully you bought a building that can be go through a real estate cycle. The other thing is if you bought a building that's appreciated, it's appreciated and it's an appreciation investment. So it's not a big cash flow investment. Maybe it's a single family residence or it's a duplex that's making only $200 a month or $600. That's a tight way to go into a cycle because your appreciation will drop a bit. And if you really bought the asset based on appreciation and that's not there, it's kind of tough to hold for 3, 4, 7 years as the market goes down and you come back up. And again, this is on historic numbers. It's not on what may happen because we never know. So it's sustaining. And so those single family residents and things are probably a little harder because you don't have as much cash flow. With an apartment building or a bigger apartment building, if you're lucky enough to have them, you have more padding. So you do give up some of your income. So I'm gonna go on to, are there any questions? Okay. Any questions about cycles? All right, I'm gonna go on to another sheet that I have here. I'm gonna take the screen share off and go to this so I can read this. All right, so I talked to a couple of different people about the down cycles, and one was my property manager. And so she of course has been through this with buildings. And she said one tip, if a first-time investor buys multifamily, living in the unit will obviously lower the interest rate, which will make things easier. She did that with her husband when they got started. Now they're property managers and they own different buildings together. So the other thing she said, don't speculate. So her opinion was don't speculate. I guess that's meaning try to get too fancy or take something and fix it up and change it or do too much. Try to be conservative is how I read that. Build up a reserve to cover major repairs that come up. So hopefully you've gone into it and you really always should have a good reserve for repairs. And the school book term is 10% of the cost of your building. So, that's a $50,000 or $500,000 building would be, 10%, is that 50,000?
Mhm.
Yeah, 50,000. So that's kind of the rule. I don't know if the banks are good about looking at that, but I don't think that right now they would require you to have 50%. But having a good reserve is a good idea. The next one is live below your means. So her feeling was just don't stretch things too much and be prepared. Okay, so this is a really good one. Jim Frings is an investor. He owns, I think, probably somewhere around 400 units in Phoenix, Houston, and I think over 200 units in Long Beach, where I have most of my properties. So I emailed him and asked him what he thought. And this is definitely true. Try not to sell. You just hold. The building goes down in value. You just hold. You're getting your income. You know you're in a good area because you picked it in the first place, and you hold. Yeah, so that's when people get into trouble, when they sell, and that's when we can pick up properties, is because somebody else wasn't quite set up. So, all right, keep units full at almost any rental level. So that was interesting for me to read. Like, just lower the rent and get the unit full. Just keep the cash flow coming. Don't hold on and say, well, 2 months ago, which I have a propensity to do, is to say, well, this is what the rent is, and I go to get it, and maybe I can't get the rent for 2 weeks, and I still keep saying, well, is the ad right? Oh, maybe we should change the copy. I don't think the pictures are good enough, when likely 99% of the time it's the price. So I love his note about keep units full at almost any rent level. So that was good. And then buy everything you can. So I think that was an interesting insight. Buy everything you can. Of course, I'm right now going into the cycle. I probably won't buy anything because I don't need anything, and I don't want to take on another building. So not everybody has to buy, or is it financially set up to be able to buy. Okay, and I asked him, when do you think the market's going to go down? And again, these are just total speculations. He said a year. That's exactly what he said, 1 year. Okay, the next one is a pretty complete answer by my brother. So my brother has been in the market. He's had an interesting cycle in the 80s. He and all his buddies in Phoenix, Arizona were doing commercial real estate, rezoning. You go out to dinner and be like, hey, did you do this? And did you get the $500,000 loan? And I'm buying this and I'm rezoning that. It was just a bunch of real estate people in a free for all. There was no, not the restrictions, not even close to the restrictions we have on our mortgages now. And so it was a free for all. So I'd go to Phoenix and every conversation was about real estate. So it really went bust there. A lot of people gave their buildings back to the bank. They had to take big write-offs because their mortgages were dropped. The bank would come in and say, all right, we don't want you to walk away. We don't want to take this building back. We're going to drop the mortgage from $1 million to $700,000. So you can make your payments. We'll adjust the interest rate. Yes, definitely. Oh, they renegotiate. But remember, banks have done that with houses in the last 5 years in the mortgage crisis. You'd go into the bank and say, I can't pay it. So you're taking the asset back, or you can work with me. Same thing happened on these huge loans. But then what happened is, if they, and I don't know if the laws are the same, if they take your loan from $1 million and they say, well, okay, we're cutting it to 700,000, you have to pay capital gains on $300,000 because they basically gifted you the 300,000. So then all of a sudden you're due 24% tax on 300,000. So my brother's wages were garnished, and there's a whole thing that went on. So so here's what he says. Most everything is on sale. If you like something, so my brother writes this, Doug, most everything is on sale. If you like something at 500K, you got to love it at 425K. Down cycles are why you keep your powder dry. So then, I don't know if anyone knows what keep your powder dry is. I had no idea. So I sent him another email and I said, what's keeping your powder dry? And here's what he said. He says, keeping one's powder dry is making sure you have a stash for a rainy day. If the roof gets blown off, or you wreck your friend's car, or property down the street has to be sold on a fire sale, you have the money. So I don't know where that would come. Keep your powder dry.
Well, meaning have some reserves to buy a deal.
Yes, definitely, but powder dry. Maybe it was gunpowder. Maybe it was have your gunpowder dry to take the shot. Ready to fire. That's all I'm thinking. So anyway, he says have your powder dry, and then let's see. don't buy something just because it's inexpensive. There may be a reason why. Others, other than the stage in the cycle. So of course, always be a prudent buyer, right? Don't just grab something. If you've always bought B properties, maybe stretch a bit to buy an A property. So that's a great thing. Maybe someone like me says, oh, I have this level of portfolio, but I say, well, look, I could go in and get another level in my portfolio. So something like that. Warren Buffett is a big buyer when there's a blood in the streets. He says that's when you really make the money, buying good stock in this case. So I guess that can be, applied. And like I said, I have 3 buildings. 2 were in foreclosure from the last cycle. And so this is another part I want to, before I go on with my brother's words of wisdom. I have a building that was in South Central, and I bought that, and it was, it foreclosed. I bought it for $275,000, and the last owner had bought it for $610,000.
Woo!
Yeah. So that's Amadea. Woo! Anyway, so yes, so that's
Leslie, that wasn't Leslie.
that. Yes, so that's a big loss. $610,000 to $275,000. So I don't know when he left it, but I bought it for $275,000. So as we say, we'd say, let's see, trash is cash. So if you go to the harder areas further out, lower rent areas, which this was in, you can see it got hit really hard. $610,000 to $275,000 is really a big hit. So in the better areas, you don't get hit as much. So if you buy a beachfront property, it's probably not going to, it's not even remotely going to drop over 50%. People will buy something in downtown Beverly Hills or right on the beach or Redondo Beach, just knowing through cycles, they're pretty much going to stay put, and they're no-brainers, and the tenants pay a lot of money and they've got a high level of tenant. So anyway, that's that building. I bought another building in Long Beach that was, a guy was trying to, this is back to Jim's comment about don't speculate. So in the last down market, one of the buildings that I bought, a guy was taking it and converting it from apartments to condos, and he got stuck in the middle of a cycle, and so he lost the whole building. So I bought it. It has all.
He didn't have money
because he couldn't finish the deal, and no one was buying condos. It just was, he was never going to get his money out. So the bank took it back, and I bought it from the bank. And that was one that, it's already gone up a lot. So he was speculating. That's that, don't speculate and get caught in the middle of the market. Play it really safe. I just talked to somebody right now, and they have a building that they're going to get done that they're doing to flip, and it'll be done in February. And they're already saying, it's not looking so hot. So my brother keeps going on to say, people have been trying to call when the cycle is for years. And here's what he says too, which I think is really interesting. The US economy is strong, unemployment, low inflation inflation is in check, interest rates are pretty low, even though they're going up. P&E ratios on stocks are acceptable. It's a good guess as to really what's going to happen. But his feeling is, there's some really good indicators of strength. So even in this down market with the stocks, my brother just goes back to like fundamentals are still there. Although I think basically what's hitting the stock market are all the tariffs and a lot of the trade deals that are going on. So it's going to cost everybody a lot more business so their profits will come down. So that's what the correction is.
You think so?
Yeah. I think so. But we're also, we've all been buying and making money for a couple of years, and it's just time to correct a little bit. Then the last thing he says, Buffett has always stayed invested and did not try to call corrections. So in other words, didn't try to sell and get in and out. You just keep a little powder dry and wait for your favorite to go on sale, is what my brother's last words are. So yeah, I guess that's, staying invested is part of the thing, is really staying in there. It's very hard sometimes though, because people get squeezed with their cash flow, their appreciation went down, and you have another 3 or 4 years to hold, and you're only making $200 a month or $300 a month, and your assets worth 25% or 30% less, which was the money that you made in the game, and that's gone. It's a little tough. Okay, and then the next one is by the real estate agent. His name's Bogey, and he's at Marcus and Millichap, and he just says the 3 things he would recommend are buy, buy, buy. But of course, that's coming from a real estate agent. But everybody seems to have buy-in there somewhere. So that's definitely in there. So Jim Harrison is a guy that did business with my dad for years. He's in Arizona, does a lot of industrial prices, everything price per square foot. What does it cost to rebuild something? You know, looks at things in that direction. He owns industrial in Arizona and also Utah, and I think is expanding to other markets as well. Been doing it for a long time. So his words of advice were, don't over leverage. So it's going to be hard to over leverage because basically the banks won't let you. And even since the last mortgage crisis, the banks are really keep us all in check. They're not doing 0 down, 10% down loans anymore. And if they are, it's very rare and it's very small slot that someone can get into that. Like they're a veteran and it's their first home and it's, you know, there's a lot of qualifications. So generally, don't over leverage. The banks are going to help you not do that because they're not going to be very happy about over leveraging. They don't want to risk it. Treat your tenants like customers. So that's really important. That's same with Jim's comment up top, that keep the tenants at all costs, keep the units full. So same thing that Jim says, and then protect your investors. So if you have investors, in some way protect them. And I'm not sure that that applies to what we're doing here. We're kind of all buying our own buildings, but that's what he looks for and what he knows he's got to do in a down market. Okay, and I asked him when he thought the market was going to go, and he said within 12 months, it's already starting in some areas. So next one I have is over here. Let me go back to the next sheet. Any questions anybody has? Okay, so.
Leslie, I have a question. It's Wendy.
Yes, hi, go for it.
So, and maybe you can keep addressing this if you have any more comments, but
yes,
where we just started escrow in Hawthorne.
Yes.
And so listening to this, if I were neutral, which I'm not,
yes,
I would think that now would be, I mean, I hear buy, but you're talking about down market.
yes, down market, right.
We're anticipating the down market. So I would think, can you speak to like our situation where we were looking, we don't have it, so we don't need to hold. We're not obviously not going to try to sell it anytime soon, but it just seems like maybe it would be better to wait.
Well, sometimes you can't, like you're in the middle of a tent. So Wendy has shared, she's in the middle of buying a building. They're in escrow, they're in their contingency period. She can pull out, she can stay in it. And then here I'm doing this class on real estate cycles. So she's got some concern, rightfully so. So I don't know, Wendy, I don't know your exact numbers, but from what I understand, she's buying a building and it's got a lot of square footage, and the plan is to put some walls in and make 2 bedrooms into 3 bedrooms.
Where is it?
Hawthorne.
Oh.
Yes, and so they're going to value add. So with that in mind, I think that finding a property that's got that much potential is your insulation. And then like me, once you get the building going, you've got some cash flow going, the market's going to go down. You just keep that cash flow. You keep paying down your loan, you hold your building, you maybe do some improvements, and you know, it'll start coming up again. But we don't know how far, this is the other thing. We don't know how far we are off from a cycle. Trump could come in and change something tomorrow and everything goes back on course, or they could say, we've changed our mind, we're not going to raise interest rates, we're going to level off. So then you would have missed 2 or 3 more years of appreciation before we go into a down cycle. So you can't assume anything, you know. So I think if you have a building and doing what you're doing is perfect, doing a value add, so you have more padding, and then you get, you know, set up, the building looks good, do whatever, you know, get some things on your list that you want to do, or do some things now that would make high impact for bringing your rents up, and then you hold the building through the cycle.
Thank you.
You might have 2 or 3 years more of upcycle. And I have to tell you, in the last cycle, I remember being in the group, and the real estate mastermind group wasn't run by me. It was run by Anna Zimmerman, who did a fabulous job. But in, I believe, 2005, people were on fire. They were speculating buying in Hemet. I'm doing a condo conversion.
Remember that?
Yes, Amadea remembers. Everybody was doing all this stuff. And I remember being at a meeting and I was standing by the fireplace and I looked out at everybody. I said, I wonder what's going to happen to all of us. Like, this is pretty crazy. And I don't know what's going to happen. But what I do know is that one person said, the market's going down. I'm selling my apartment buildings. And I went to my mentor and I said, okay, he's getting out because he's like, he doesn't want to take the drop. And my mentor, Marty, said, well, first off, he's going to pay capital gains. So there's like 24% if you're in California. So you lost 24%. So if your $1 million building now, you just only are going to get 750,000, right? And then you're also, you don't know that you're at the very top of the market. So this person did sell. He paid the capital gains. He took all his money and he said, I'm going to go somewhere else and make money and speculate. Well,
Ooh.
right, exactly. And so it was a bust. It was bankruptcy. So I'm not saying that happens with everybody, but it's really getting in and holding on and knowing these are going to happen, right? And, you know, we're not talking, if you were in the middle of Kansas on a prairie, it would be worse. You know, being in Los Angeles, being in Ventura County, LA County is not going to just absolutely be vacant for a year. You know, that's why we buy in the highly populated, dense areas.
So Wendy, can you hear me?
Yeah.
Hawthorne is where the other guy is.
Yeah, it's right by
So
Kevin's.
It's a duplex?
No,
It's a quad.
Oh, quad.
fourplex.
And what, how much, for how much? What was the price?
So the price is $1.5 million. And we do have part of a 1031, but it's really not that much. It's about 40,000.
Were you here at the last meeting?
She was,
Oh, okay. You were
Yeah.
looking in Ventura also, right?
yes.
Yeah, now we found a place in Hawthorne. But
And where do you live?
we're in Westlake Village. But
So are you going to move? Are you living in one of those units?
no owner occupied.
Right.
Right.
So yeah, this building that she's buying is by Kevin, which is another investor in the group. So they're both gone together, which I think is fabulous. They've both come together and they're both buying it together, which is really great. I'm so excited to have some synergy, people investing together, especially when it's a good match. So so Wendy, did that answer your question?
No, so my question is, like, in California, in LA, for example, just obviously this is all speculation.
Yes.
If it were to go down, like how much on $1.5 million building, how much might it go down?
Well, it depends on where it is. Like I said, like the worst, like my area in South Central went down 50%. And I don't know what the bank had the loan on, but it went down to 275 on a 610 building. So it depends on where it is, really. And you really don't look at, like I bought a $1.2 million building and the market went down, it was worth 900,000. So really in almost the bottom of the market, I had the taxes redone and they did comps and the city of Long Beach said, yes, your building's worth $900,000. But it didn't matter because the money was coming in. I wouldn't have sold it. It's a good property. What you're buying is a good, strong property. So you just don't know, you know, and your area has a lot of things that are happening there. So I think I always say too, everybody knows this, I say you don't just buy the building, you buy the city. So Hawthorne seems to have a lot going on from what I'm hearing.
So one last question, thank you.
Yes?
Is what cash flow are you looking for? So obviously, like, we're doing value add, but what would be good cash flow versus not?
You know, I would have to look at more numbers than that because like if you have an 8-unit building, the cash flow and you know, and an 8-unit in South Central is $1 million and an 8-unit in Long Beach in a nice area is $2 million. So I'd have to look at the building more. I think it's enough that you have some padding for rents to go down 20% or so.
Okay.
You know, so, yeah, I would say that if you have I don't know if that they've gone down 20%, you know, but that would be an interesting question. That is a good question that I don't know. And this is where I would almost say to you to talk to different managers. Even if you're going to manage, talk to them and kind of talk to them about things like that in the area and what they're seeing. Get some input. This is what it's about. And that's what my real estate group is about, is getting input from other people. And so use a team and talk to somebody. You just always can learn more. But I don't know that exact number
Thank
of
you.
what the percentage went down.
Appreciate that.
Yes,
And how much did you have to put down, Wendy?
they're trying to do their loan and get 25% down.
And
Yeah.
did you guys go into 50-50?
We're
There-
working on that.
It's a complicated thing.
Oh, I
So,
see.
and I don't know that she wants to share all the financials on a web thing that's going to go out there.
Oh, okay.
Okay, so I'm going to read, any other questions before I'm going to go? I'm going to go with another write-up from Rick, who's actually the agent that Wendy just used. So any other questions before I move on? Okay, I'm going to just sort of read this directly what he wrote. He thinks the cycle will go down within the 12 months. It's already started in some areas. So we already heard that from somebody else. There are signs that as far as single family residents are concerned, the market has already begun to contract in late May. I currently own 3 homes, 2 already on the market since May and July, and we've had only 1 extremely low ball offer, even after multiple price adjustments. So what I would wonder about that is, where are they? You
That's what
know,
I was
that's
gonna
what
say.
that's what you would wonder. Where are
Yeah.
they? You know, and again, you know, if it's flipping, that's always something that I think is a little bit risky, because you really have a time constraint. And
Well, people
If
have
you
been
didn't.
flipping in my neighborhood all over the place.
yeah,
But
So-
probably not a good idea to do it starting now.
no, I don't think so. So okay, so he goes on to say he definitely says things are definitely slowed down, and it's hurting our bottom line with his property anyway. Can you get that, please, or just turn it off? Okay, as far as multifamily is concerned, Rick goes on to say things have started to slow down there also, but not as dramatically as the single family residence market. And he's not sure that ultimately it will be as bad as the single family residences. And I really believe that too, because single family residences, again, when a market's down, people moving around everything, people just stop changing things. Us investors, we know the multifamily, people need a place to live. Everything's going to come back. We're investors. Secondarily, we've taken care of our housing. So the investors don't fall back as much as the home buyers. And condos get hit harder than homes as well. It's just, for some reason, the condos get hit harder and take longer to come back up. So as far as multifamily, we talked about that it's not going to be hit probably as hard. We're observing longer days on the market on multifamily, and not a lot of multi-offers scenarios like we had been. Probably, I would wonder, Wendy, what's been your experience? Because Wendy just recently has been putting offers in on buildings.
We changed the market. We were looking in Long Beach in the summer,
Yes,
and there were 10 offers on a place within a couple days.
right.
Changed the area that we're looking at, and we were looking at places that were on the market longer. So
Right. So that's interesting. She was in a kind of a more happening, I guess I'm going to say, re-gentrified area in Long Beach, and there was multiple offers. And then she's looking in Hawthorne and subsidiary areas, and she says that there were less offers. But I also am not sure that that's for sure true, because all over the areas may have just been the properties that you hit, because Gallo had been looking, and there, I believe my sister was looking, and there were definitely like 20 offers on things as close to like June and July. So, and those again are smaller though. Those are 2 to 4 units, and really we're, when we talk about multifamily, those are 5 units and above. So,
Leslie,
yes,
we changed our strategy, so we were looking for places that were overbid and on the market for a while, and we were
right. So I don't know if anyone heard that. They had a strategy to go find things that were overpriced and on the market for a long time, and then come in. And sure enough, they really did negotiate with the price, and went to them with the number they were willing to pay, and then negotiated. Okay, so then he goes on to say, he thinks that cap rates will begin to rise, which means that things are getting less expensive, and gross multipliers will begin to fall in most areas as they did in the late 2000s. But this time around, he says, I'm not sure it will be as dramatic, because there's still a very real housing shortage in the greater LA area.
Yeah.
Unemployment is way, way down, and it's not like in the late 2000s where we had a deluge of property, lower rents, and higher vacancies. The jobs are here in the LA area. So no one is going anywhere. They all have to live around here or nearby. There are more and more cars on the road, so commuting to Riverside, San Bernardino is going to look even less appealing than before because of commuting times. So that says a lot. That to me, things just are getting denser in these cities. I just was driving through Santa Monica, and I can't believe the density of the housing that's there. It's like people are willing to, it seems to me, to take smaller places to lessen the commute.
Mhm.
So that's probably a trend overall. And maybe, in the downtown areas, Venice and things like that, people are probably not going to be driving from Long Beach up to Venice or something. They're going to go try and find a small apartment somewhere in the area, maybe not commute. That's based on what he said and just what I've seen in Santa Monica is people are taking small places and ditching the commute. Okay, then he goes on to say, however, if the interest rates continue to increase, that may offset any gains that have been made. So the interest rates are going to play in, of course, but that's adjustable. We don't know that they're going to stay on the same track. It certainly is giving everything a jolt right now, and so there may be some adjustments that aren't quite as forward thinking as they have been. We don't know. My suggestion, this is Rick's suggestion, is that if you see yourself needing to go into heavily leveraged right now, make sure it's a great deal. You'll probably have the advantage of a better interest rate now than you will in 6 months, but you'll want to leave yourself some room for a rental downturn. 12 months from now, when your leases expire. So in other words, just be prepared. Exactly the question you asked Wendy, going in, and he's kind of answered it here. And since you're working with Rick, he'd be a great person to probably talk to about this because he might know what the rental drop is. All right, hopefully, he says that things will hold. He says he's on hold as much as, he said, I hold on to as much of your net income as you can, which goes back to somebody else that said live within your means, and save it for that rainy day or year. Put away a nice, healthy repair maintenance reserve also. Again, when it rains, it pours, so you want to be ready. So as you see with that, like my brother and Rick also went into, yes, there's going to be a cycle, and both kind of were within this 12-month period, but then the economy's strong. So no one ever really knows. It could be 2 to 3 years that we'd still have some more appreciation, or we're just not going at the rate that we were. But generally, you really want to set up and know it's happening, and they do happen. So just beware when you buy a building and when you go in that there's a cycle that could be around the corner, and be prepared to hold long term. I don't think anyone should buy anything that they're not wanting to hold for 10 years. It's a lot of brain work to get into a building, sell it, 1031, move the cash, research another area. I really think they should be long cycles. But I'm also a long-term conservative buy and hold gal, which has worked for me. And I like I said, when I was in 2006 with everybody with the real estate group, and we all said, what's going to happen to anybody? I was the most boring one because I would just say, well, I'm buying. Oh, I'm just going to hold. Oh, what are you doing with your building? Well, I'm just going to hold. 3 years later. So what have you done with that building? Well, I'm still holding. So
She's the only one that didn't lose her shirt.
I held through it, and it was just there wasn't anything else to do. I was making good money, and there you have it. And I bought in good areas and all. And I still hold those buildings. And some were starter buildings that I thought I'd trade out of, but what's the point? They're working well, and they're part of the family at this point. So any other questions anybody has? Well, then I think that I have probably shared as much as I have about real estate cycles right now.
I want to talk about, I was just in the,
We have Amadea asking a question here. Yes.
I was in the car today hearing that there's some propositions that are going to.
Oh, yes. Thank you.
Yeah.
So here's what's going on too. There's Proposition 10 is coming up on the ballot, which is about rent control. And it's about giving the whole state voting on rent control. Statewide, the whole state is voting on Proposition 10, and it's that rent control could be given to each city, and each city can do their own rent control. So can you imagine if Hawthorne didn't do rent control and their neighboring Inglewood did and Long Beach did and the next one didn't, like the prices would be all over the place. Renters would be looking for you know, the tied up properties, it would be all of us who would own buildings would be definitely trying to get our rents up before that happened, which is happening now, which is interesting. We're all doing rent raises because this might happen. So if it doesn't happen, the person who really has lost out will be the renters, because we've all raised our rents. Not all, I don't want to say everybody has, but we're kind of hunkering down for a possible rent control. There's also a lot going on in Long Beach specifically with the rent control. And I wrote letters to the mayor and the council people today. So that's really active. There's a really strong group down there because that's a big rental community.
They're trying to get it.
Yes, they've already voted once and it didn't make it through.
I remember.
And there's a really strong group in there again. So it's hard to say. I've thought about taking some money of mine out of the real estate market in California, but you know, if you go somewhere else, and if I go into something else, I mean, if you own an apartment building, basically you're investing in your own business and the business of people needing a place to live. If you buy a commercial building, you're reliant on that person running their business well. And it might be a little guy with his, you know, I don't know, a thrift store or anything like that, 7-Eleven to any other type of store. But they do go out of business and things do shift sometimes, or they do not, you know, renew a contract. So I look at other things and I'm contemplating taking some money out of this market, but then I think,
Meaning selling?
yeah, selling something in 1031 exchanging, but I really trust the market and units. So there's a little risk we're all teeter-tottering on right now.
Leslie, your buildings are in great shape. What, even if there's rent control, so what?
Well, you can't get somebody out. So I had a guy this last May, and I was a nice gal. He was tampering with all the electrical. Like there's a pyro that likes fire. He was like an electro, and he liked all the electricity and was doing it. And we kept him, and he finally imploded. So I should have given him a 60-day notice. So then there are cases where I've given 60-day notices, or somebody comes in and they're always yelling at their spouse or something, and we can move them out for the you know, whole building to do better. But we wouldn't be able to do that likely under this, because the city could come in and say it has to be just cause and you have to go in front of the board or go to court or do something to get somebody out.
That's huge.
That'd be huge, right? And then of course they would limit the rental increases. But I think some control would be good in some ways, because I can go do a rental increase for any amount, and that's tough sometimes. And my rents have gotten behind, and I'll go do a pretty big rental increase because that person's been living there for 3 or 4 years, and the rents have gone up, and I didn't do rental increases, and I find myself behind. But what a shock when they get that. But my feeling is too, they've kind of been on the gravy train and had units that were, you know, inexpensive, and now I'm just kind of getting more up to you know, normal.
Well, what this radio show said, I mean, they were really taking it was very sad actually to listen to it, because there's so many poor people who are living in squalor.
Yes.
And
So
the landlords don't have to do anything about it. And I can't remember
yes,
where
so
it
this
is
is
a whole band. Did you hear this on
this is the
NPR today?
rent controlled units, right? I think she's talking about the rent control, because what happens is that
no,
in
these are
certain
not
cases,
rent controlled.
not rent control.
No,
well,
but
then that's another level than most investors that I know deal in. You know, like we don't like, you know, we have nice
But what
apartments and all.
happens is that the landlords just keep raising the rents, and these poor people either have to move and they can't afford to find a place, and the landlords are not keeping these buildings up to health codes.
Well, so Amadea is talking about, but realistically, she's saying that she heard something on the radio, and it was about landlords raising rents but not keeping the buildings up. And part of that's possible, but realistically, I've gotten a call at least a couple times where I have an angry tenant that has called the public health department and said, like, the carpet in here's got mold, and you know, Leslie's cleaned it twice, and we want new carpet. And so they call the health department, and they're out there immediately. And I can get a tag on my building. They also take over buildings sometimes and won't give you your rent. If they're really bad, they won't give you your rent. And then other investors sometimes come in and buy those buildings and fix them up. So I'm not exactly sure the circumstance that you're talking about, but yes, rent control is possibly looming.
This whole anyway.
Yeah, so I'm going to wrap this up, because I think the whole real estate cycles conversation is sort of complete for this 10th day of October, again tomorrow. Interest rates could change, the stock market could change, at least North Korea is not going to bomb us. We thought that might happen a year ago, but we were looking pretty good for that not happening. So thank you so much. You've been with me at Real Estate Masterminds with Leslie Ann Smith. I appreciate you coming to listen. And my group is on Facebook, and you're welcome to come and join anytime. Real Estate Masterminds with Leslie Ann Smith. And we will be having more meetings and in person here in Venice and also on Zoom. Thank you. Take care. Bye.
Thank you, Leslie.